Imagine this. Today you can move millions with just a couple of clicks, but the engine behind it isn't always a bank. That's where the word you're hearing more and more comes in: Fintech. A fintech is a company that uses technology to offer financial services in a faster, more automated, and user-focused way. Payments, international transfers, currency exchange, cards, wallets, loans, investments, digital KYC, data-driven risk scoring, and even the invisible infrastructure that connects banks, businesses, and platforms. So what's the difference between a fintech and a standard bank? First, the license. License and regulation. A bank generally can take deposits from the public and is subject to strict capital, liquidity, and prudential supervision requirements. A fintech might be regulated, but it often operates under different licenses, for example, as a payment entity, a money remitter, or an electronic money institution. It's not better or worse, but it's not the same thing. Second, the operating model. A bank might have legacy systems, more cumbersome processes, longer timelines, and internal layers of compliance. A fintech is born with a digital stack, onboarding in minutes, automation, APIs, and an obsession with reducing friction. Third, risk and custody. In a bank, your funds are typically held by the bank itself, and depending on the country, there may be deposit guarantee schemes. With a fintech, your money might often be segregated or held in custody through a partner bank, or even moved through third-party networks. That's why when someone says, "I use X fintech," the technical question is, who actually holds custody of the money and under what legal framework? Fourth, cost and speed. Fintechs usually win on efficiency. More competitive FX, faster transfers, simpler reconciliation, real-time dashboards. Banks compete on stability, reach, complex corporate services, and long-term relationships. And now the most important part: if you work with trading or international payments, look at these points as a mental checklist. License type and jurisdiction. This isn't a minor detail, it's the core of the risk. KYC, AML. How robust is their onboarding and monitoring? Payment rails, SWIFT, SEPA, ACH, local networks, stablecoin rails. Each one has its own rules and risks. Purpose of payment and compliance narrative. What story does your documentation tell when the payment is audited? Reversibility and disputes. Under what circumstances can your funds be frozen, and how do you escalate? The takeaway, Trendwell Vision style. In finance, the winner isn't the one who moves fastest. The winner is the one who understands who is touching the money, under what regulation, and what happens when something goes wrong. If you want to operate like a professional, don't fall in love with the app. Fall in love with the technical framework behind it. This is Trendwell Vision, understanding oil like a professional. If you like these types of videos, give it a like, follow, subscribe, comment, ask questions. Thanks.